American Bitcoin has just announced a major milestone. Its strategic Bitcoin reserve has surged to 4,783 coins. That's 416 new Bitcoin added in days, and it signals a bold new chapter in the evolution of public Bitcoin treasuries. Facts: the new reserve level marks a 19.5% increase from earlier in the month. The company's Satoshis per share indicator rose to 507 Satoshis, a 17.3% jump that reflects stronger underlying Bitcoin value per share. The firm also expanded its mining power from 10 exahash per second to 24 exahash per second, more than doubling capacity in a single year. Financially, the company returned to profitability with more than $27 million in adjusted EBITDA during the third quarter. Professional forecast: if Bitcoin stabilizes or enters a new bull phase, American Bitcoin's large reserve could dramatically amplify shareholder value. Under favorable market conditions, equity upside of 50 to 100% over the next 12 to 24 months is feasible. However, the same leverage becomes a liability in downturns. Bitcoin price swings of 30 to 50% remain historically common, meaning the company's valuation will likely track Bitcoin volatility closely. Continued growth in global institutional accumulation may strengthen long-term demand, positioning American Bitcoin as a key beneficiary. Market impact: news of the expanded reserve may boost investor sentiment across crypto mining equities. American Bitcoin's rapid accumulation effectively broadcasts confidence in Bitcoin's long-term value. This could draw in funds seeking regulated, publicly traded exposure rather than self-custody. In the broader market, rising miner demand may add steady upward pressure on Bitcoin, while increased energy consumption and scaling activity may attract regulatory attention. Benefits for ordinary people: for retail investors, public companies like American Bitcoin offer a practical way to gain Bitcoin exposure without managing wallets, private keys, or mining hardware. The company's investments also stimulate job creation across energy, infrastructure, and data center industries. If Bitcoin appreciates, shareholders benefit directly from reserve expansion. Harms for ordinary people: the flip side is considerable risk. Bitcoin's extreme volatility can rapidly erode the value of both reserves and stock holdings. If regulatory bodies impose new restrictions on mining or digital assets, investors could face sudden losses. Operational costs tied to energy markets may rise, reducing profitability and increasing financial strain. Historical parallels with numbers: in past Bitcoin cycles, miners holding large reserves often experienced dramatic valuation swings. During the 2020 to 2021 bull run, several mining firms saw stock gains of 150 to 200%, only to fall by 70 to 80% when Bitcoin corrected in the following year. In 2017, a similar pattern unfolded when miners with aggressive reserve strategies experienced 2 to 3 times the volatility of Bitcoin itself. American Bitcoin's current trajectory mirrors these historic cycles: high upside potential paired with amplified risk. American Bitcoin's move to 4,783 Bitcoin is more than a headline. It's a signal of where the crypto mining industry is heading. If you want deep, data-driven insight into how this evolution could transform markets, mining, and digital asset strategy, make sure to like this video, subscribe to the channel, and stay tuned for full-spectrum crypto macro coverage.